Are you, like most of us, unclear of whether a property is a condo, a townhouse, or a PUD? And what the heck is a co-op? I had to scratch my head and call on outside sources to gather the information for this topic so that it could be shared. This is Juliana too. There are similarities and there are differences, and sometimes one could be the one and it could be the other, which makes it a little bit confusing. But when the prices for a standard single family home rises, many of the upcoming generation are looking into more affordable housing for their first time home ownership attempt. And for others, the problems with home ownership are much reduced when it is a condo or a townhouse. Empty nesters and senior citizens might fall into that category. At the end of our session, I have a short list of things to watch for, no matter what type of structure it is. This list, I feel, is the most important takeaway that I can give you. But first, let's head on to the disclaimer. The information contained in this video is only intended to provide a guide. Different parts of the country may classify the structures differently under their own code sections. In addition, the original developer of the project may also have had a different classification in mind. For further information on any particular project or unit, consultation with your real estate professional is highly recommended. I am sure a potential buyer will look at a property, and if it isn't, or maybe it is an obvious single family home structure, you might wonder if this could be a condominium, a townhouse, or a single family home that is actually part of a planned unit development, a PUD. What are the differences between them and a single family residence standing itself on a lot? We look at each type of dwelling how ownership is classified. Please note that the information I am giving you is general in nature. There may be differences between classifications of the projects. But first of all, let me point out the similarities between them before we discuss the differences. Each of these types of properties are differentiated from a single family standalone home in that they are part of a community association, a homeowners association, or an HOA. All owners of the units have an automatic membership in this HOA and elect a group of them to run the association. More importantly, all members are guided by certain documents that are set up when the project and the association were formed. This is the governing body and the governing documents that are comprised in an association. First of all, the Articles of Incorporation, which states that the association was filed with the Secretary of State. The bylaws, which details how the association is run, and the covenants, conditions, and restrictions, the CC&Rs. These are restrictions that are written into the use and development of the project and its individual units. Also, a part of the day-to-day documents that the association could keep are the budget, which delineates the planning of income versus expenses of the year so that there will be sufficient revenue. The financial statements, which show the association monthly dues collected by all the owners and members and how they are used. Rules and regulations that the owners have to follow. Minutes of the meetings. HOA members should meet at least once a year to bring out problems, issues, and review the financials. And a reserve study, a study of how much funds are going to be needed to be set aside in a reserve to be used for future maintenance and repairs of the whole complex. Not all associations have all these documents, but most of the larger ones should, pursuant to the guidelines set up in the bylaws. Besides the units themselves, which are individually owned, all associations have common areas. These are areas for everybody's use. Some of them are just walkways and lightly landscaped areas, and others have community centers, which the members can access and enjoy, like pools, tennis courts, community rooms, clubhouses, gyms, and so forth. All associations have dues. The HOA dues are a cost paid by the member for the upkeep of the association. What is included in those dues depend on what type of property it is. Here's what could be included: water, trash pickup, common area utilities, common area maintenance, termite work. Also included in the HOA dues could be the insurance coverage for the building structure if it is a larger residential complex, and also insurance on the common area and community center. Insurance for the interior of the unit is always the owner's responsibility. Now, let's get down to each type of property. And here is a chart to break down it into more swallowable components at the end of this session. First, we have the condominium. The condominium is usually part of a larger building complex, and it is similar to a unit in an apartment complex. The building has a main entrance door, and the units are separated by hallways. It has common areas that are shared between all condo units, like hallways, elevators, garages. There was a time back in the early 1980s when many apartment units were converted into condo units, and then they were individually sold. Unlike apartment units, which you rent, condos are purchased, but the ownership is only to the interior airspace of the unit, plus a percentage interest in the common area. Because it is a part of a larger building, the building replacement insurance is usually covered by the HOA and part of the dues. However, the unit interior, now the unit owner is responsible for any insurance to the interior of the unit, also known as walls in or HO6 insurance. Now, the townhomes. A townhome, as you can see, is usually multi-floored units that share one or two walls with their neighbors and they have their own front door. Sometimes they are described as row houses. Most projects have a unified design and color scheme that cannot be arbitrarily changed by the homeowner. The ownership itself includes the unit, the external walls and the roof, the land under that unit, any lawns or gardens surrounding that, and a percentage ownership in the common area. Now, the insurance on the building and the interior is purchased by the owner. The HOA usually keeps the insurance on the common area. A planned unit development. As you can see, it could be huge. The planned unit development is usually a separate standing single-family residence built into a community of homes. Now, this community may have many more amenities than a standalone single-family home may have, including private parks, playgrounds, community clubhouses, pool areas, tennis courts, and so forth. These units are built onto individual lots, so ownership includes the lot itself and, of course, the PUD on top of it, the structure on top of it. Ownership also includes access to community areas and amenities through the membership in the HOA. Now, the structure of the building and the interior insurance will be purchased by the homeowner itself, and the HOA will keep a separate master insurance policy on the common area. Housing cooperatives. I thought I might as well mention housing cooperatives in this session. This type of property is rare in some parts of the nation, but they deserve mention because they are quite different from the individual standard single-family homes or PUD, and they're also different from condos, which are also single units in a large residential building complex. Now, a co-op is a single apartment unit in a large residential building complex. but its ownership is not an outright ownership of the unit. A corporate entity owns the entire building. The unit owner only purchases shares in this corporate entity. Now, the owner then has a proprietary lease to the unit, and the number of shares that you own in this co-op is going to be commensurate to the square footage of the unit. The bigger the square footage, the more the shares. Like the HOA board, the co-op board of directors manages the building and the corporate ownership. More importantly, ownership can only be sold if the board approves the buyer of the shares. Applying for ownership to a co-op is dependent upon the rules set forward by the board of directors. The buyers have to qualify and their financial and personal backgrounds looked into. The more stringent the requirements, the more exclusive the project is given, and of course, the more valuable the shares are for purchase. You can obtain a loan on the shares that you wish to purchase. These are called shares loan, and it's not a traditional mortgage loan that you would get to purchase a home. The cost of living in a co-op is dependent on the cost of the operating of the building and the amenities. So each share is assigned an amount to pay each month, and the more shares, of course, the higher the cost. Insurance on the building is covered by this co-op, by the cooperative entity, and the owner purchases insurance to cover the interior of the unit and his personal property. One of the most important things of buying a co-op is to look carefully at the financial statements, since you will be ending up owning a part of this corporate entity. This includes looking at all the mortgage loans that the corporate entity has to pay on the building, because you're going to end up paying a prorated part of it in your monthly share. Also, utilities, insurance, and other maintenance costs that are also prorated into the shares. For those of you interested, here is a simple chart to characterize the differences between each type of property. What do each of these different types of properties and their ownerships have in common? They each have some sort of homeowners association. Each has its own operating documents, the bylaws, covenants, conditions, and restrictions. Most have or should have other operating documents like rules and regulations, financial statements, and so forth. If you are considering the purchase of any property in this category, it is important that you review the documents carefully, for the project's financial condition will be very important to your ownership. Here are some of the tips. How many different homeowner associations might this one unit have? There are some parts in Southern California where I practice, there could be 2 or even 3 associations with their own individual documents, regulations, monthly dues, and transfer fees for that single unit. How strong are their financials? Do the monthly income from the dues cover the expenses? Are there amounts set aside to fund future maintenance projects? What types of restrictions are there to the ownership? Are pets allowed? Are units allowed to be rented? Is there an age restriction? What restrictions are there to the maintenance, painting, or repairs of each unit? What is the list of rules and regulations? You should always go in knowing what you can and you cannot do. How well are the units maintained, the common areas, the outside? With an eye to the future, when you sell the unit, what are some of the fees that the owner has to pay upfront to obtain updated documents? And what are the transfer fees that are going to be charged to this unit seller? The reason this is mentioned now is that you will not be shocked then by how costly a sale could be in the future. A payment of $500 to $700 per unit per association is the norm. After you purchase the unit and you become a part of the homeowners association, participate in their meetings. Give them your input. Look over the management company that is handling the association, if there is any. Your responsibilities are not only just to your unit, but are extended to the association as a whole. A strong and well-run association brings a higher value to each unit. My t-shirt for today. My visit to Copenhagen resulted, of course, in a meal at the Hard Rock Cafe and a t-shirt to add to my collection. Copenhagen, my friends, is the city of bikes. They want to hit zero emissions in the next few years. Well, I think I learned a great deal just researching this topic of condos versus townhouse versus PUD, and particularly about co-ops, which I rarely have had to deal with in my 40 years in the business. I hope that you also learned a great deal by walking through this video with me. This is Juliana too. Thank you for watching. Thank you for liking me, and I hope you subscribe to my channel. I shall see you in my next video.